If you've been wondering why mortgage rates have been going up when they're supposed to have been coming down, more importantly, you're wondering where they're headed next, then this episode is going to be for you. My name is Amir Narani. I have been in the mortgage space for a little over 20 years, and not only do I specialize in the mortgage and real estate space, but I also have a very intimate knowledge of financial markets, which allows me to understand the direction that interest rates are likely to move, why they're likely to move that way, and that helps me not only share that information with you, but also all of my clients. So let's talk about it here today. It's March 8th today. Saturday. We are still in the midst of a war. Nothing good comes from war, but war does move financial markets. One of the reasons you are seeing mortgage rates go up is specifically because of that war, but it's important to understand why. Usually when you see economic turmoil abroad, domestically, you tend to see a rotation out of stocks into bonds. Now, this is important. Your mortgage rates are going to be predicated off of the bond market. If bonds go up, mortgage rates go up. If bonds go down, mortgage rates go down. And when you think about the bond market, why does that go up and down? A lot of that has to do with demand. If there's not a lot of people buying bonds, the bond market has to go up, pay higher interest to attract more investors. And if you have a lot of demand going into the bond market, the exact opposite happens. Then the market makers don't need to pay as much interest in order to attract that money into the investment. And so that's the general relationship of bonds and interest rates, right? So usually you see economic turmoil, you're going to see the bond market come down, right? And then you're going to see mortgage rates fall. But in this case instance, the reason why you saw them go up is because war is inflationary. Now, let me kind of break this down for you. Let's say you have a bond market that is paying back 5% on somebody's money, meaning that without any risk, they're going to get 5% back. Seems like a pretty good deal, right? Well, depends, right? If inflation is running at, let's say, 3%, right, then the 5% return is really a 2% return, right? 5% return minus 3% inflation gives you the 2% netted return. When you have an environment like war is known to be inflationary. So wherever the inflation rate is today, market makers are taking a look at that, pricing in a bond. Investors are looking at the market and going, if inflation goes up, the return on this bond isn't going to be as attractive. And as a result, you didn't see people running into bonds when this war kicked off. You saw them kind of take a step back and go, that might not be the safest place for my money to go. And so as a result, you saw the bond markets start to creep up to try to attract that investor capital. This is why you are seeing mortgage rates increase. Now, where are we headed from here? The unfortunate truth is there is a very, very high likelihood that we actually start seeing mortgage rates creep back up. I think in a perfect world, we end the year in about the same rate range that we're at right now. But realistically, the chances are that we're probably going to be higher. Why is that? If you look back at the last 6 wars, 100% of the time that we've had a war, the Fed has printed money, which has caused inflation. This is going to be no different. I think Trump's already gone back to Congress to ask for $50 billion. You can almost guarantee that that's just the start of the amount of money that they're going to need. This war is going to be expensive. And the only way the Fed's going to be able to pay for it is by printing money. When they print money, it's going to cause inflation. When that inflation occurs, the bond market's going to go up to try to attract investors because investors are not going to be willing to take the same return into a higher rate environment for inflation. Right? And the reason why that's relevant to you is it's probably not going to stop. You're probably going to see more money printing, more liquidity coming in the market. And as that inflation goes up, here's the other thing that happens. The Fed can't really lower interest rates confidently because they're afraid of it spurring additional inflation. And that's one of the reasons why we saw rates go as high as we did. It's because inflation ran crazy out of control. I think at one point close to 10%, meaning that whatever you bought for $1 cost $1.10 by the end of that given year where inflation was running so high. This is after COVID. The Fed's scared that we're going to head back in that direction. So right now, in the midst of this war, the longer it persists, the more likely it is that we are going to have a high degree of inflation. And the amount of money that we've asked for, which is $50 billion, what the president's asked for to fund the war, is probably not going to be enough. So when you understand these things, it's important to know that you have an opportunity, both as a home buyer as well as somebody that owns a home that has been thinking about refinancing. This might be a golden opportunity for you before rates start ticking up. Think of it like a very very minimal window of opportunity. And so this is why you're seeing rates move the way that they are. You're seeing things go up, not down. And this is why you can anticipate that in the short run or the foreseeable future, at least on the first half of this year, you can expect rates to continue to climb, right? And if you want to know how this impacts your situation specifically, in the description of this video, I'm going to put a link to my calendar. We can take a deeper dive on this if you'd like. I'm happy to chat that over with you. We can also figure out what that looks like or means for you in terms of your homeownership endeavors, right? I always appreciate you watching this show, and I want to remind you that Digital Dwell and Deal is 100% free, never any ads, and never selling you anything. And the only way this channel grows is if you like, share, and subscribe. So I will always appreciate if you do any or all of those things, and I'm looking forward to connecting with you again very soon.